So we are live on Facebook. Welcome everybody to the Not Your Average Investor Show, Thursday edition. Today is when we dive into the Q&A segment and we try to make it as interactional as possible. We try to drive interaction.
Intergalactic, I think is what you're talking about.
I think that's what it is. Good call. My name is Pablo Gonzalez. I'm the host of the show. My co-host is Gregg Cohen, co-founder of JWB. Say hello, Gregg.
Good to see you, everybody. Happy to be here with you.
Absolutely. And we are very happy to be here. Agreed. We have people that join us every week, and we love seeing the names pop up over and over again, like Marilyn. Let me see. I'm rolling through here. Mike Foster, welcome back. Rich Glover, Roldan, Tonica. It's good to see y'all every week that we have you. But for those of you that may be joining us for the first time, we go into a little bit of housekeeping to start. Number one is we want to drive interaction. And there's two ways to do that. One is the chat function at the bottom of your screen where it says chat. If you want to talk to us, it's already made that way for all panelists. But if you want to talk to everybody so everybody sees it, hit that drop-down menu that says all panelists, make it all panelists and attendees. And now everybody can chat and see what you're saying. And we really, really encourage that because we want to drive connections between everybody else. And if you want to get your question asked on air here, go to the Q&A part and pop that in, and you can pop in questions there, and we keep track of all of those and get to all of them. At the end of every show, if there's anything that I haven't gotten to, I send it to the team so they can follow up with you. So it behooves you, if you have a question that you want answered, to use that service. And last but not least, if you are new to JWB, the show, what we're doing here, and you just want a little bit of a more foundational understanding of what JWB is all about and how they go about doing rental income property investing for you, go to jwbwebclass.com. There's a 45-minute webinar there where our boy Gregg here breaks it down real easy for you to understand how it works, where to do it, what to look for, why JWB does it the way that they do. And if you're already past that level and you have a little bit more peak curiosity and you want to know exactly how rental property investing fits into your portfolio, go to chatwithjwb.com, pick out a time to talk to our team, and they will be more than helpful. That first call is always informational. They're always just looking to see where you're at in your journey and give you the best advice possible and see if there's any other steps. So don't overthink it. If you think you're there and you think this is for you, just go to chatwithjwb.com, set up a time. I guarantee you it will be a good time. So without further ado, Gregg, you ready for today's Q&A show?
Let's do it, brother.
Awesome. I want to start with, let's talk about that fan call, right? Like I, as I said, thoroughly enjoyed it. What sticks out to me as the theme of that call and in other conversations I've had with you is mentorship. You went up to Than, and this was early on before he was known as a real estate educator, and you asked him for mentorship. I wanted to ask you just how you approached that and what made you think to go do that.
Yeah, it was a really special moment in my life, is that moment. You know, there's those special moments that you'll always remember in your family life and growing up. And in growing up in real estate, now I'm 15 years later in this business, I still remember what it felt like seeing Than and Paul and Conrad, his two business partners, along with himself, up on stage in this conference. I remember being in the back of it. And the reason that I was originally, attracted to learning from them and wanted them as mentors is because they were three young guys, and it was myself and Alex at that time. And it felt like this entire conference room that we were in, or this ballroom we were in at this conference, was full of a lot of people that were a lot older than us. And so I saw three guys on stage, and I was with my best buddy who we were just starting this company. And I'm like, man, they have what I want. And it wasn't money, right? They have this ability to build a business with their best friends, and it happens to be in real estate. And so for me, it could have been anything else out that we happened to be talking about, selling, building a business around. It happened to be real estate. But the thing that I really, really wanted is I wanted to build an organization, or I wanted to have a career that I could do with people that I knew, love, and trusted. And I wanted to be meaningful, and I wanted to be impactful, because I was coming from a career in corporate America that I remember waking up every single day while I was working at that job and wishing the next 8 hours of my day would just be over before they started. And I saw people who had lived that way at this job for 30 years with that job. And I said, it doesn't, the money is really the least of the motivators for me. I just wanted something that I felt like I could enjoy my time, really sink my teeth into, make an impact, make fun of the people that I was working with and have them make fun of me, and have that constant challenge that, a best friend or a business partner provides. And so, that was the big motivator for me. I didn't know how many people I was going to see who were young, successful in real estate, because we were the only ones in the conference who were under the 30 years old. and that's what motivated me to get up and go and talk to him. I'm not really an outgoing guy. I'm more of an introvert. And so it was incredibly rare for me to go up and talk to Than. That's usually why I keep Alex, my business partner, around. He's the guy who's out there shaking hands and kissing babies and all that good stuff. But yeah, I look back in that moment and I just feel like truly blessed. It was such an incredible time. And now, I don't know how many 15-year relationships in business you have, but that's what Than and I are working on. And, it'll be another 100 because he's a really good dude.
That's awesome. Have you had other moments like that, right? Like, I know that you've talked in our conversations and here on the show, even you've talked about a mentor that you reached out to about consensus decision-making. Are there any other marked moments of people that you've reached out to for mentorship and what those topics were about and how you did that?
Yeah. You know how when I asked Than that question, he didn't have a whole lot of defined mentors that he had gone to. He had a kind of a collection of mentors. He talked about his business partners as being mentors, and he talked about people in different various roles in his life as being mentors. I would say it's the same for me. Than was a defined mentor for me, a coach for me in the very beginning. And I can think of one other defined kind of coach mentor that we had. He has since passed away. His name was Hal, an incredible business consultant that we had. Geez, we probably started to work with Hal maybe 7 years ago now. He passed away a few years ago. But that was another defined mentorship. And that was coming at a different point in our business. At that point, we probably went from maybe 30 people on our team to maybe 50 people on our team in about, call it a year and a half. There was an incredible amount of growth, and just going from 30 people in an organization to 50 created challenges that we just had never experienced before. It's like we went from like a little kids to like, teenagers in a business sense is how we felt. And there were strains on the business, and there were strains on our working relationship between the four of us. And we really needed to reach out to somebody who was a master of kind of organizational theory, constructing a business the right way, helping you understand layers of management and layers of leadership, and how to invest in those leaders to bring those leaders to the places that you want and need internally. And so that was an incredible partnership and mentorship. The rest is just by, I love my business partners. They're incredible mentors to me. We all sort of have our own little superpowers and super weaknesses, and we help each other there. And then through just connections that we have now, but really all throughout, right? We were just very open and humble and not afraid to ask the dumb question, and I'm still not afraid to ask the dumb question, right? I think that has allowed us to be able to not just find people that could shed some educations, shed some light on subjects for us, but also make it like they wanted to help us, right? If you are truly humble and you're a good person and you ask somebody that you have some sort of relationship with for help, and you do it in a nice way, more often than not, people are going to want to help you. So that's really been, relying on our network, other than those two kind of defined mentorships for us.
I hear you, man. I'm definitely the guy that relies on having the community be the mentor, right? But there's also I think there's value in seeing that at the beginning of a journey, there is the need for a formal mentor, or at least there is the opportunity for great value in having a formal mentor. And then at inflection points, there is value in having formal mentors. And it's pretty clear to me the fan one, I forgot his name,
Hal
Hal.
Resnick.
How did that one start? How did you decide to pick him out?
I'm so glad that you asked this. This is funny. I haven't told this story in a while, and I know Hal's looking down on us right now, but so it came at a point where, and I'll just set the stage. So it was, I'll call it 2012. It had to be 2012 when we started working or interviewing Hal, because we were still in our old office. And for those who have come on our campus tours here at JWB, you've seen our office. We have 12,000 square feet now. We have about 80 employees, and there's a whole lot of room now. Our previous office was not that way. We were in this 2,500 square foot office. It was a previous salon. So when we first moved into this place, there were sinks in every office. So if you can imagine going in and trying to build a rental property portfolio, you would sit down with somebody, and in the back of their office, there's a sink. That's how the genesis of this started. So we had this former salon. We did minimal upgrades and renovations to it for many years. And we stayed there until we had about 30 employees, 30 teammates in 2,500 square feet. And at the time, we were probably managing about 500 to maybe 700 homes at that time as well, who at that point, nobody paid rent online, or a very small percentage paid rent online. So you get an incredible amount of foot traffic coming into this place. It got so bad that when tenants would come and pay rent, or anybody would come to have a meeting at our location, they would have to drop the keys off at the front desk, because you would have to triple park, because we only had 12 parking spots. So you were forced to triple park, and that somebody needed to be able to move your car for you if you were in a meeting. So that's a little bit of what life was like prior to moving into this office. That's the setting for when Hal came to be interviewed by me.
All right.
So Hal, as I now know, is this really decorated business consultant. He has served some of the biggest names here locally, some of the biggest business leaders here locally, as well as nationally. And here was this guy. I found him online, and he came into my office, and I said, all right, Hal, listen, I need you to know how this is going to go. This is a really important decision for me. And so I'm going to put you through an interview process. And I can only imagine what Hal was thinking as he was triple parked, walking into an organization with sinks in the background of the office. And he's like, what is this guy thinking, right? So I put him through an interview process. It was multiple rounds, and he passed with flying colors. It was funny. He handed me his book on how to do everything that he does as he was leaving his first interview. And I was like, oh, wow. This guy's written a book. That's a pretty good sign. And he was so humble. He didn't put it in my face or anything. We laughed about that for many, many years afterwards. But yeah, I found him online, and I interviewed him along with a few other business consultants. I wanted to make sure it was going to be a good fit. I wanted to make sure it was a long-term relationship and somebody that we could grow with. And that's what it turned into. It went from a leadership development program for the four of us. We then rolled that out for the leaders on our team. And then over the years, it came to where we would have a consultation day with him once every 3 to 6 months. And he helped us build our business plans in some of the years that we needed the help the most. And so that was, that was incredible. But it did not start off that way, because I can only imagine what he was thinking with this young kid who had way too many employees and too small of space was giving him the business, you know?
That's awesome. That's awesome. Well, I'm glad we shared that in memory of Hal, right? And I hear in that, and I think no matter what space you're operating in, whether that is your physical space or your mental headspace or whatever, you were conducting yourself in a professional manner as a company, right? Like you had a process in place, and And it wasn't you didn't come from a place of scarcity. You came from a place of deliberate process, which I'm sure added to that relationship.
Yeah, we've always had this weird part in our heads where we thought, we thought we were a lot more successful than we were. I won't say it's like we were acting as if or like faking it or whatever. I think it's just that we just always envisioned that we were going to be doing this differently than most people in real estate. We were going to build a business about it, and we just believed in our long-term success. And if you believe in your long-term success, sometimes you forget about the fact that you have a sink right behind you in your office place. But we did the same thing, with our first legal team. Again, Larry was our first attorney that helped us. And we sat down with Larry before we had done any deals. And we said, listen, Larry, we're about to do 100 houses this year. I hope you can keep up. And he said, what? He's been in business for 35 years. He's a 55, 60-year-old gentleman at that point, who it was the most respected lawyer in town as far as real estate investors go. And he's got these young kids who have done nothing. So we've always done that. But it never came across like we were the biggest, the baddest. It was matched with a tone of humility, and clearly we're very quick to make fun of ourselves and self-deprecating. So I'm sure that was a part of it as well. But we did say those things because we believed it, and you got to put that out into existence. And you have enough great people around you, you'll get there.
I love it, man. I want to, speaking of great people around us, I want to give some love to people commenting. Marilyn put, hey there, great call with Than. She loved the camaraderie. Loana Fam writes, you were funny. Love the red carpet treatment that you had for Than. Tonica Gherkin writes, it was great to see the journey for Than and you and Alex in the car with a broken door. now look at you all. Roldan Crepo writes, down to earth, realistic and encouraging with discipline and optimistic mindset. It's possible. We believe. Love it. Love it. We love these comments. These are very, very fulfilling. And Amy just wrote also, good stuff, guys. She's learning a lot and trying to close on her second turnkey rental with JWB. Come on, City of Jacks. So that's exciting.
Congratulations.
Amy. Yeah, definitely.
And who's that Amy who?
Amy Boyd.
Amy Boyd. Congratulations, Amy.
Yeah, that's awesome. So I want to go to now, I'm going to tie two themes together, but first I want to start, I want to talk about how you talked about the name history of JWB, and then you highlighted a property on Matthews last week in your walk and talk, right? The first thing that I want to bring up is, as you talked about having started JWB as Whose Homes, and then having 30 different names, and then finally consolidating under JWB companies, I see a theme of you kept simplifying the process in what you named your company. And I see a theme in what you do, right? Like you talk about this hedgehog concept in simplifying the process for people that want to invest in rental income properties. Can you talk a little bit about that?
Yeah, that's one of our basic kind of tenets of success, is focusing on one thing that you are great at, rather than the approach of finding a whole bunch of different shiny objects out there and trying a little bit of each. Do you know why and how we came to that conclusion, Pablo?
Trial and error.
Yeah, screwing it up. Doing the exact opposite in the beginning. And I think it's a common thing. So for those of us who are listening here, who may be early on in your entrepreneurial journey, it's very common for you to be looking at a whole bunch of different things. And I think in the very beginning of what you're doing, that's healthy, right? You need to figure out what you are built to do. But when you understand what that is, you got to focus on that, right? So many companies try to be a one-stop shop for so many things. JWB tried to be a one-stop shop for so many things. We tried this for probably about 6 months or 9 months. We rolled this out to our team. It was probably 2012. So we were coming off the heels of 2011 being our best sales year ever. And I remember for the first time feeling like, wow, this was the success that I had always been telling Than about, and always been telling our lawyer Larry about, and I felt like we were there. And when you taste that success for the first time, it created a little bit of false confidence in us. And we said, wow, if we can do this turnkey property thing really well, why can't we be really good at selling high-end homes, right? Why can't we be really good at doing rent to own? Why can't we be really good at doing creative financing to purchase these properties? Why can't we be really good at commercial properties? And so we went out, we created companies in the JWB family of companies. We created domain names, we created websites, and we went to our team and we said, all right, guys, well, we had a great year last year. Guess what? We're going to do these 5 new things here. It's going to be the one-stop shop for JWB. And we rolled that out for like 6 months and to 9 months maybe. And we quickly realized that we were not nearly as good at the one thing that made us great by traveling and figuring out so many different shiny objects. And the other thing, the really important thing that made us abandon ship with that one-stop shop mentality was the effect on the team. We had, probably 30 to 40 teammates by that point. And it was so distracting and so confusing for all of our teammates to know what they are built to do that we just totally made their lives hell for a little while. And, as for everybody who's on the call, we talk about why the team is the strength behind our investments. It's the team. That's why you're investing with us. It's because of the team. So if we couldn't serve the team well, if we couldn't set them up for success, this was not going to work. So we abandoned ship with all those other crazy companies, all those other shiny objects, as we call them. And we said, our hedgehog is turnkey rental properties. That is the reason why we have the opportunity to be here today, to have this wonderful team. And if and when there comes up opportunities for us to do something that might be slightly outside of the hedgehog, we're going to think long and hard before we do it. We're going to move very slow. We're going to do this internally for JWB well before we do it for any one of our clients. And we became very slow in that process. And that came from a book that I would highly recommend for everybody. It's called Good to Great by Jim Collins. He talks about the hedgehog companies. Or the hedgehog concept, which if you look at the great companies in the country, in the world, many of them focus on their hedgehog, or at least while they were becoming great, they focused on their hedgehog. And so that would be a great book for others to read. But yeah, simplification, the one thing that we are built here to do is turnkey rental properties. Obviously, property management is a function of that. So turnkey rental properties and property management, and the rest we are very, very slow to bring on.
That makes a lot of sense. So the reason why I said I was going to bring it up in relation to this property on Matthews that you talked about, and I just want to say we're going to come up on the half an hour mark. We usually go long on these, right? Like this is an interactive show. We'll be here probably an extra 20, 30 minutes. But anybody that is joining us that wants to learn more about the basis of the hedgehog and how JWB does it, go to jwbwebclass.com and you'll get to understand it in a much better way. And if you want it now, then applied specifically to how it fits into your life, your portfolio, your plans for wealth creation or lifestyle or whatever you want, go to chatwithjwb.com and hop on our call and talk to our guys. They're going to help you get to connect the dots to where you want to be. The reason why I brought up the hedgehog and Matthews and that parallel is that when you showed this property, you showed a map of where JWB's properties were. And to me, it was a hedgehog map, right? Like you could tell there was a couple points that were not, next to a bunch of other, but there was a very big cluster of properties that you own in the same areas. And it just created this big shading of a map. Can you talk about your specialization in neighborhoods as a part of that hedgehog function?
Absolutely. We're very specific about where we choose to put our own money, and we're very specific about where we choose to recommend clients to invest, right? Jacksonville is huge. Jacksonville is actually 3/4 the size of the state of Rhode Island. It is the largest city by landmass in the United States. So it's big, and there's only 4 areas that we invest in Jacksonville. And so what Pablo was talking about is we, as you go to chatwithjwb.com, you talk with my team in the course of those conversations. We're going to share with you this map so you can see our footprint. And we do that because number one, it's pretty cool to see this kind of like map and see how much, there's 3,500 homes that we manage, and they're all in these areas, right? And the icons are like stepping over each other now. It's pretty fun. But we do that also because when you are an investor, you may be living in California, New York, New Jersey, you may be living overseas, right? We have investors from 13 different countries out there, right? You're not an expert in Jacksonville. So seeing the model work for 15 years before you and seeing it work today on the same street is what I was showing on that Matthew property. I think there were 5 other properties right on that street. And many within, a half mile. There's probably 100 other properties within a half mile, right? That gives you confidence. That means that you're falling right into that hedgehog, that model that has worked over and over and over again. If we don't have to recreate something, right? If it ain't broke, don't fix it, right? That's us. This model has been working for decades before JWB came here. It's going to work this model is going to work for decades after JWB, right?
I'm not sure I understand.
Oh my goodness. You ever have Siri kind of listen to your phone calls and then start to randomly critique you, by the way?
Siri listens to all our phone calls. So does Alexa.
So this model is going to be here for forever. And we know exactly how the numbers and the dynamics work in Jacksonville. So that's where we put all of our clients. That property on Matthew Street, which was picked up by a current client of ours, by the way, which is pretty cool. That one is right there. And that's what is one of the reasons that makes us great. It's because we're not reinventing the wheel. We're doing the same thing over and over again.
Awesome. So let's get into a more numbers talk in this conversation now, right? So when you presented that property, I saw a couple of things that were a little bit different. It seemed to be a slightly higher price point than what I've normally heard you speak about. And it looked like a pretty high cash flow, right? Like I know that JWB doesn't focus only on cash flow. They focus on the overall return. But this one seemed like it was closer to $300 a month in cash flow as opposed to the $200 a month in cash flow that I think people more associate with. Can you kind of talk a little bit about that?
Yeah, absolutely. So the purchase price on the property on Matthew was $210,000 and the rent was $1,524 a month. And, all the property taxes, insurance, property management fees, you factor all of that in, you factor in the maintenance cost, the vacancy cost, you factor in the tax savings principal paid on, all those things are factored in. And at the end of the day, I think it was slightly over a 9% estimated return on investment. But the cash flow number is really high, right? 284, you'll never hear me say, hey, you're going to find a whole lot of properties with $284 a month in cash flow, right? So does that mean that this property is better than another property that produces $225 a month in cash flow? What do you think, Pablo? Let me put you on the spot there.
I'm assuming that you're going to reverse engineer this back to a holistic return on investment where cash flow is just one piece of it.
I can't stump you anymore, man. You're on to my tricks now. I'm going to have to figure out ways to stump you. Yeah, right. Cash flow is one part of the equation, but cash flow is a function of a lot of different things, right? So like, for example, this property on Matthew happened to be a new construction home, right? New construction tends to have a higher price point, right? $210,000 is clearly, near the top of the price point for turnkey properties with JWB. It has a higher rent, which is great, but you may also, and that's why it has a higher cash flow because your rents are higher and you're financing a lot of the purchase in this example. And so when you run the numbers, you're actually going to get a higher cash flow. But at the end of the day, you're going to get about a 9% return on investment. There are a whole lot of ways to get a 9% estimated return on investment. You could do this with a renovated home, which I love renovated homes, right? They tend to be a minority of our inventory just because that's what the market is producing right now. But I have a ton of renovated homes in my portfolio. And, renovated homes tend to be a little bit lower on the pricing scale, but their rents are still strong, right? And they're going to be less than that 1524, right? But they're still strong. And so what happens at the end of the day is your cash flow number will be lower on that renovated property than $284 a month, but your return on investment very well could be higher because your down payment was a lot lower, right? So cash flow is great to see, right? But don't get so focused on $284 of cash flow, right? Don't throw out a property that's $225 of cash flow, because if the purchase price of that one is a whole lot less, that one might be a better return on investment for you, right? So these are some of the things that we obviously walk you through when you're making your investment decision. We're going to look at, your return on investment for sure. We're going to look at the budget. We're going to look at the purchase price, right? We're going to look at all the different components, and we're going to help you make your best decision. But a lot of investors out there get so focused on cash flow, and to the detriment of putting blinders on for these other components, especially if they're only comparing a market like a Cleveland versus a Jacksonville. That's a whole nother part of the equation where you really do need to focus on appreciation potential. And that's how you make the best holistic decision for all of those profit centers.
The way I understand it is that holistic decision is driven very much by your situation and what's happening, and combining it with available inventory and what's out there. Is that kind of accurate?
Well, let's take it from two different steps. All right. Let's say that there's a newer client, or maybe they're not a client yet, and they're deciding between markets. So at that point, we really need to understand what is their horizon, what is the length of time they're going to be investing, and for the markets that they're considering, what are the returns on investment from cash flows, and then what are the return on investment from the other profit centers, mainly home price appreciation, right? And what we talk about often is that if you invest for a full market cycle in single family rental properties, home price appreciation is not speculative. I'm going to say it again. If you invest for a full market cycle, 10 to 20 years, home price appreciation is not speculative. It is speculative if you invest for the short run, but if you invest for the long run, it's not speculative. And the data supports this. If you look since 1991, you'll see historical appreciation rates in all these different cities across the country and different MSAs across the country. I happen to know the numbers for Jacksonville right off the top of my head. The appreciation rate is 4.3%. And if you look at 10 to 20 year segments of time since then, you're going to see that average historical appreciation rate per year repeats itself if you give it enough time, right? Supply and demand works, and it tends to repeat itself. So if you can invest in a market where you're going to get higher home price appreciation versus a market that you historically are going to get lower home price appreciation, you're going to have a huge positive effect on your returns on investment by focusing on that market where historical appreciation has happened at a higher rate, assuming you're in for a market cycle. So get back to your question. How do we build a right portfolio for somebody just coming to us right off the streets? They went to chatwithjwb.com. They jumped on the phone with us. We're talking about it. We're going to ask, what's your horizon? If you're into this for the long haul, right, we require a minimum of 5 years, but 10 to 20 years is what we recommend. Then we say, okay, now you can focus on home price appreciation. If you're somebody who wants to buy this rental property and sell in 3 years and sell in 5 years, we're not going to talk about home price appreciation. You might want to go to a market like Cleveland, because Cleveland's going to give you lower purchase prices, higher rents in comparison, a rent to price ratio that's higher. So you'll get more cash flow per dollar by investing in a market like Cleveland, right? But if you're in for the long haul in Jacksonville, you'll get slightly less cash flow per dollar invested. You'll still be cash flow positive, right? Which is the goal here. Still be cash flow positive, but you're going to get almost twice the appreciation after a 10 or a 20-year hold. And when you look back after investing for 10 or 20 years, as I have now, you're going to find that the biggest effect on your total return on investment is not that additional positive cash flow. It's actually your growth. It's actually your home price appreciation. So that's how we help people build a right portfolio if they're just coming off the streets and they're deciding between different markets. Okay?
Yeah, that makes a lot of sense. And then if I extrapolate that and I think about new construction versus renovation, I would imagine that appreciation works the same for both. And if appreciation is the driving factor in a long-term investment, then new construction versus renovation becomes less important as opposed to just investing based on that principle?
It's a great question. I get that often. Should I be investing in new constructions rather than renovations because they're going to appreciate more? What I remind people is that new construction is only new construction for 1 year. Just like we were talking about, right? We're investing for 10 or 20 years, right? You're not going to call it new construction in 20 years, right?
Yeah.
And so there's not a whole lot of credence behind the fact that this asset over the long haul is going to appreciate more than another asset that's a renovation simply because it's built today, right? It's like, do homes built in 1980 appreciate more than homes built in 1970? No, right? So when you focus on the Jacksonville area, now we're taking the leap to where people are saying, okay, I know I want to invest in Jacksonville. I know I want to invest with JWB. How do we craft the right portfolio? There isn't a conversation that new construction or renovations is better because of home price appreciation. You're in the zone of higher growth because you came to Jacksonville, and history teaches us that people are moving here at a higher rate. There's more demand for housing, and housing appreciates at a higher rate there.
Makes a lot of sense. Let's talk about other numbers. Let's talk about rent collection. Can you give us an update on where we are with rent collection these days?
Rent collection is so fun to talk about. So yeah, rent collection numbers continue to be very strong despite what you may hear in the media. I wanted to give you a transparency, real performance. We manage over 3,500 single family rental homes here in Jacksonville. So a lot of data points to share with you. A normal month in JWB property management land shows us receiving about 98.5% of rents collected. So that's history. That's pre-coronavirus. Now, March was the first month where we had some impact from coronavirus. It was the second half of the month mainly, but it was some impact. We were really delighted to see that rent collection was actually 98.75% for March rent collected. So better than normal, even though we were starting to feel the effects of coronavirus, which is an awesome testament to our team and to the relationship that we have with residents. Then April came. Everybody's like, oh my goodness, are we going to be able to collect rent? Is this model gone to hell in a handbasket? I don't know. What's going on? And, there was a lot of fear. And I don't mean to make light of it. There was a lot of fear. I was scared at certain points in that time, right? We were all scared. But there are certain things that have been proven. And investing in a critical need is a good thing, right? Investing in housing is something that people need. It's something that the government needs as well. And so while we didn't know exactly all the support that would be coming in the form of stimulus, it was a good bet that it was going to happen. And it has, right? So April rent collection, again, at a time when you cannot evict, we were wondering how can we collect rent? Rent collection for April came in at 97.5%. We were just 1% off of what a normal month would collect, which is an incredible testament at a time, again, when there's not a negative consequence at this exact moment for not paying rent. So can't speak highly enough of the team. And then May, the way to actually calculate rent collected, you give it 30 days beyond when a month ends. And that's the final number here. So May rent collection is still going to go up from what I'm about to share with you. But when I pulled the numbers yesterday, we were at 94.5% of rent collected by May, which is actually ahead of pace of where we were the month before. So I would expect us to be somewhere between 97 and 98% of rent collected for May. Again, showing consistency during this time. And some other news, which some may or may not be aware of, is that the foreclosures and evictions moratorium in the state of Florida was extended. Originally, it was supposed to end May 18th. Then it was supposed to end June 2nd. Now it's been extended to July 1st. And so this affects all properties in the state of Florida, regardless of the type of loan you have. So that will happen. Some other news is that, and I'm just going to keep going here, Pablo, because you gave me the mic, and I'm just going to keep going. Some other news.
It's your show, Greg. It's your show.
Florida has now entered into phase 2 of the reopening as well, and so that is a positive sign. We want to get people back to work, and that's going to happen there. So I don't know what your original question was. I think it was about rent collection. I just went on and on. I don't know. Did I answer it?
Yeah. It was, I was asking you what the rent collection numbers were, but really my question is, what is the effect of the coronavirus on JWB business, which you've basically answered, that rent collection has yet to show that it's been affected. despite the idea that the old reason that you could drive rent collection is eviction, and that's no longer there. So JWB has clearly found a way to motivate rent collection via the carrot instead of the stick, which I think is pretty good thing to lay your pillow on. And now it seems like the state is opening up some more.
Yeah, and it's never been about the stick, right? You don't really build long-term relationships where people want to stay with you for years and years and years and renew with you if you're viewed as a bill collector and so yeah, I think it is the result of years and years and years of positive relationship building and incredible effort by the team here at JWB. You know, I make it sound simple. There are a ton of logistical obstacles to do this. I mean, my entire team had to go remote and collect rent. We had to do remote lease signings, which we had never done before. We had to say no to anybody trying to drop rent off at the office, which, you know, prior to this, a lot of people still did, right? There are so many challenges. My team, unbelievable credit to who they are in overcoming it, making it look and sound easy. But yeah, it all goes back to those relationships, man. It's like everything else we do. It's like how you and I talk. It's like how the people on our call here relate all the wonderful comments that you guys send in the group. I mean, I can't tell you how much that positive interaction helps. And sometimes you guys call me out and make fun of me, and I appreciate it, right? That's, you know, part of a good relationship. So, you know, we do that too.
I'm glad you brought that up, because I got a question here that's kind of calling you out. It's going to be a dinger. Real quick, I want to bring up the fact that we've mentioned the group a couple of times. If you're new to this call, we have a Facebook group with over 1,300 investors in it. That you can find at jwbfacebookgroup.com. That's where Gregg goes live every morning with his real estate walk and talks. That's where we drive interaction. We get to know each other, and our community lies. So if you're new to the JWB ecosystem, I want to invite you in. We call it our little cool club, but it's our community. It's our group of friends. So if you want to come in and just see behind the curtain and see what we're talking about, go to jwbfacebookgroup.com. We'd love to have you there. So now, speaking of calling you out, Mike Foster's got a dinger for you here, Gregg. You ready? He says, Gregg, in the years past, say 5-6 years ago, you actually downplayed property appreciation and focused investors on cash flow. Appreciation was basically viewed as a bonus, but we didn't want to depend on it because of market volatility. What's caused your view here to change?
It's a great question. View hasn't changed. I still downplay it. But I feel the need that when we're talking about different markets, that is such a critical part of the decision-making process. So, you know, Mike, if you look at our property evaluations, which anybody can look at our property evaluations by going to the website, jwbrealestatecapital.com. We make them available for you there. If you look at them, you're not going to see property appreciation listed on the estimated returns on investment. And it's because we don't want you to, you know, it's because I don't know how long you're going to own that asset, and I can't be sure that you're going to own it for 10 or 20 years. And I don't think that you should count on home price appreciation unless you're going to do that. It's also because of, you know, the way that we are at JWB, and Mike has this experience. We really want to under-promise and over-deliver. So I don't want to put expected returns on there, including appreciation on there, because that would take our expected returns into the teens and maybe even the 20% return on investment. And I don't want that, because I don't think that attracts the right type of client. I want somebody who wants there to be slow and steady and above average returns on investment and wants consistency. But it's nice to have the potential to get to that kind of next echelon of returns. So, you know, our tune hasn't changed in the sense that we still downplay the effects of appreciation as being a reason to come to this asset class. However, when asked about why you should invest in Jacksonville versus a different market like a Cleveland, I'm going to sing appreciation from the rooftops, because that is the differentiator. And even more than that, when you look at returns on investment, this is what I think most people don't understand, is that when you look at returns on investment after a 10-year hold or a 20-year hold, that amount of return coming from cash flow on a percentage basis is going to be like this. And that amount coming from home price appreciation is going to come like this. I don't know how to do it, right? It's going to be a whole lot more, right? So that's why I feel compelled to share that data with folks in that regard.
I think that's really well shared, especially when you brought
Did I get that right?
the visual imagery of why you talk about it that way. I thought really hit home.
It's science, man. It's science.
I appreciate it. I see that Tess Karamitzios is raising your hand. Tess, if you have a question and you want to pop it into the Q&A, that would be great. If you really want to come on the call based on your question, that we are open to experimenting with that we've never done that before. I also wanted to say, coming in hot from the Facebook group right now, Anthony Ditta just writes, great news to share with the group. Just closed my third JWB property. Thank you, Gregg and the JWB team for your support and making the process so easy.
Awesome, man. Way to go, Anthony. Anthony and I have been talking on Tuesday nights. I do a replay of our Not Your Average Investor show. I do it at 9 p.m. and he's there in the watch party. I've gotten to know him. I've gotten to know what he's investing for with his daughters and all that good stuff. So awesome to hear that great news, Anthony. Thank you for sharing, buddy.
Yeah, that's great. That's great. And Gregg, I want to open up some space here for a slightly more difficult conversation. And I'll start with a question that was brought in early, that really connects to what we're going to talk about and what we have been talking about. And John Henning asked, have there been any effects of the Jacksonville riots / civil unrest on the market and the current tenants? Can you comment towards that from a business perspective, and then we'll talk overall after?
Yeah, just such a sad thing. Sorry, just getting a little emotional here. Just a really sad thing. Wow. Just such a tough and difficult conversation. Tragedy to see the murder of George Floyd. We've been really affected as a team, and we let our team know today just our thoughts on it, and that we felt that this is a time for leadership to take a stand in the face of injustice, and we felt that, and we feel that it's a time to go from somebody, my business partners and I, we've been, it hasn't been a platform that we've spoken out on before, but we're just so touched by what has gone on that we feel like it's a time to go from being silently non-racist to actively anti-racist, right? It's a time to be a part of the positive change. And we shared that with our team, and just had an incredible response from our team. It's, I think it has affected all of us. So, John, I appreciate you asking the question. It's, I'll get to the kind of the business perspective in a while, but I just wanted to share that with everybody. Our hearts and our thoughts go out to the families affected. It's hard to put ourselves in the shoes of somebody, a person of a different color, but I think it's a time to lean in with empathy and compassion and truly try to understand in a way that all of us maybe haven't given us as much effort as we should in the past. And so what we decided to do as a team is to support a local company here. We're going to be donating $10,000 to a local charity here that supports the Black Lives Matter movement. We support peaceful protests. We let our team know this. We support peaceful protests. We feel that the riots, while we haven't seen nearly what other cities have seen, the looting and the riots are despicable. But it doesn't invalidate some really important conversations that we need to have. And so we want to be a part of the positive change. We're going to be making a donation. Would encourage others to follow through and do that as well. And we haven't figured out which organization yet. It's one we want to make sure we align and be a part of the positive change, not just from this donation, but for us going forward, because it's something that has truly affected us. Like I would imagine everybody on this call has been really, really affected there. So thanks for giving me the opportunity to kind of share that with you. I don't know. It's really emotional. It's really, really tough.
Yeah. Take take your time with it, man. I obviously, this is a really hard thing to talk about. I wanted to kind of echo what you said. Laura McElroy is saying, well said, and please repeat. That to go from quietly non-racist to actively anti-racist. I think that's terminology that's gonna enter our lexicon of the difference between non-racist and anti-racist. And again, this is a really difficult thing for us to talk about. I appreciate your genuineness and sensitivity to the subject. I also wanted to circle back to John's actual question.
Yeah, let's get to the business part of it.
Did it affect your tenants or your company or anything like that?
I don't know that it has any, there hasn't been a tangible effect that I can say this has affected, from a rent collection perspective or anything like that. It's still early. We had a lockdown. We had a mandatory curfew in Jacksonville for Sunday night. We had some disturbances, some riots in downtown Jacksonville. We had a police officer that was harmed during one of the riots in Jacksonville. And we haven't had that curfew in place since, I believe, Sunday night. And so there were peaceful protests yesterday. And I believe they've been mainly peaceful since for the last couple of days. And so we're not seeing the type of rioting or looting that we're seeing in some of our other major cities. So I don't know about the business effects. I think as a country, as a world, we're going to be affected forever. I hope that we're affected forever. I don't really see a specific effect on this asset class or property management, and definitely not at this moment. But I hope positive change comes from it. So I hope something positive. I hope we all can be a part of positive change.
Amen, brother. And that's I just want to be transparent in that we were going to speak about this on this call. We wanted to save it to the end because we know it's difficult and it's kind of has us in the somber mood now. But I want to applaud you for, it's not easy to cry on screen, man, in front of people, right? So your vulnerability and your genuine way that you communicate it, man, I think it's pretty brave. And I'm happy to be a part of a company that is taking an active stance when they see something in the world that they think they want to be a part of, that they take a proactive approach, man. So I applaud you and your partners for doing that. And I want to thank everybody for being part of this call, for showing up. This is a really good turnout for our Thursday calls, right? We've had upwards of 25 people, up to almost 30 throughout this whole call. We really appreciate people joining us, giving Gregg and I the platform to talk about what we love and also talk about difficult things as well. It's a privilege, and we don't take that lightly. So thank you for making time out of your day to be a part of this call. And if you want to continue to connect with us, I've listed the things on the chat for where to connect with us. And we've mentioned it a couple more times. I don't know if it right now is the place to repeat anything markety, but Gregg, I just want to kind of give you last goodbye here.
Yeah. Just, really appreciate the opportunity to share that with you guys. I haven't had a good cry in a while, and didn't know it was going to be happening. As you can tell, I don't know. This is just such a topic. So appreciate all of you for the support that you give me, not just in a time like this, all the time. And let's keep the focus on this issue and positive reform, and not about JWB, right? The last thing we would want to do is to take any focus away. So let's focus on being a positive influence. And I'm excited about what we can do as a country when we unite. So with that, another one's in the books, my friend. We'll do it again next Tuesday at 12:30, and appreciate you all.